in the correct screen now, so we can get going here. Okay, I put some stuff together. I know you guys got some questions. I don't know how much experience you have in trading futures. I do understand your question there, Robert, so we could talk about that. Let me start up with this. Got some images here. I want to bring this up, and we'll talk about if you've traded futures. I know you have, Robert, so you know it's a contract. It's a derivative contract, just like options are derivatives. Futures are derivatives, and they obligate the parties to buy or sell if you're short or long at a predetermined price. This is another little illustration on what are futures. I pulled off off Google, and you know if you're the seller or the buyer, and you're obligated contractually to deliver. If you're still in the if you're still in the contract at expiration, except for some of them settle to cash. And I don't know if I have a slide on that yet, but we're going to know that. There's really two kinds of futures, and I know this is probably grade school for you guys, but the stock indexes, currency, interest rate products, energies, metals, agricultures, and soft. These started out, from my understanding, futures go way back to the tulip fields in the Netherlands, where they would use them to protect the pricing, just like the farmers did over in this country when they're putting the wheat in the ground or the corn in the ground at the beginning of the year, and they're uncomfortable about what the price is going to be at harvest time. Some months later, they could sell a contract to lock in that price, and basically it's the same thing here, just kind of like an option on a house. You put you buy a house, or you put a house under option contract. You've got the right to buy that house at that price at some future date. And of course, all like options, they all have expiration date. One thing you should be aware of, and you'll see a little difference in this pricing, I'm sure you're aware of it to some degree, there's eventually a convergence of futures and spot prices, and we'll take a look at where the futures are trading right now and where the spot prices are in the case of the NDX. A couple notes I threw together here was just an overview, and we're mostly talking about futures contracts as investment tools. I also use them as hedging. I did it effectively yesterday on the futures, and we won't really deal in. You can portfolio insurance is basically, to me, the same as hedging, but sometimes I get in a weekend situation, and I try to keep my portfolio pretty delta neutral. I skew a little short delta, so I'm kind of have short deltas. I prefer to have a few short deltas. Basically I'm neutral. The majority of the world is long, so you've got long deltas, and if you're facing a weekend of uncertainty, and let's say you have $100,000 stock and not stock and option portfolio, or you can use a future to take the other side. So if you're basically long, you can buy some futures or sell some futures, whatever you want to lock that in. So if it moves dramatically over the weekend, your portfolio may crash, but the future will go up an equal amount. Or I don't normally recommend hedging 100%, but 70% is kind of a good number. And we're not going to really spend a lot of time on that today. I just want to kind of introduce you, because this is I've been trading these things since 2001 or 2. I can't remember for sure. There's many of the futures markets, and the ones that we're going to trade, or that I trade, are open 23/5. They open a typical day. They open at 6 o'clock at night, Eastern time, 5 Central, and they go all the way to 5 the next day. They close for an hour. They used to shut down for a 15-minute period. Now, I'm talking about the index futures, the stuff I trade. I don't know if the silver and gold futures, if they still have that short period. They used to have a period from 4:15 to 4:30 where they shut down, reopened at 4:30, and then 5, and then they shut down for an hour. So, for our discussion purposes, the stuff I'm going to talk about and the stuff that I trade, which are primarily the E-mini futures or the micros, are those open on Sunday night at 6 o'clock. So you can start trading at 6 o'clock Sunday night. You don't have to wait till 9:30 the next morning, although it's typically slow overnight. and then they'll run all day, close at 5, close for an hour, back again at 6, and go again until Friday. When they close at 5, they're shut down until Sunday. So like I said, we're going to talk mostly about the futures on the indexes. I know you want to know about some of the commodities there too, Robert. So in this, I think will answer some of your questions, Robert, if I understand. First of all, these are the commonly traded futures. I got this chart off of Tasty Trade the other day. You guys you might have seen it. The E-mini is probably the most popular. That's the one I used to trade. And I think the important thing to understand, and you kind of alluded to this a little bit, Robert, is the notional value. People don't realize the notional value of a product they're trading. So if you're trading one E-mini contract, now I haven't traded these for a while. I used to trade the E-mini, but they were, they weren't 5,000 or 4,000. They were, 1,500 and all that. So now the buying power requirement for holding the position overnight is $15,400. So when they put this chart up, I have a chart like this, but I have it with dynamic pricing. That was traded, say, 39.47, 4,000. So you multiply the times the future contract, you come up with your notional. So you trade one E-mini, you're controlling almost $200,000 worth of notional value in the market. So it's a big number. Fortunately for some of us, they've come up with this micro contract, which is what I'm going to show you what I do. But to continue about the E-mini, you've got the notional size. You could trade it. To give you a concept of the size, you just trade one contract. It's just one contract. One contract in the E-mini basically is equivalent to about 500 shares of the SPY, and that's a dynamic number, obviously, because if the price of goes down, the price of the SPY will go down a little bit, but it's kind of always around 500 shares. So think of that as say, when you trade an E-mini contract, am I willing to trade, or is that a comfortable size for me to trade 500 shares of the SPY? And that kind of puts things in perspective. So the tick size is, there are 4 ticks to a point. Got filled on some. I wanted to, when that got filled, it set up an order, and I want to put another order in here. Well, let's see, I'm at 1875. I want to put one at 1575. All right, let me bring the presentation back up. These are the primary ones, and I know you talked about silver. We'll look at that in just a second. I'm mostly trading the micros now. They're much smaller. They're 1/10 the size. Before I started trading futures, the only thing was the big S&P, which is what only the big boys could trade, because it was 10 times this size. I mean, one contract, was, $39,000. So they came out with the E-mini, and I traded those for years and years and years. They're $50 a point. The tick sizes, there's 4 points. That's why they say tick size is a quarter. So if you take $50 divided by the tick size, a quarter, it's $12.50 a tick. Now the micros, which I trade, and if you're new, I'm highly recommending those, because if you make a mistake, it's not nearly as painful. Obviously, you don't make as much money, but I think you can learn how to trading the micros, because they're becoming more and more and more. Let's talk about that a little bit, but you can see they're 1/10 the size. So to hold, and I usually hold 2, right now I don't want to, but I'm holding 2 or 3 contracts overnight, so each one ties up about $1,500 in buying power. Now you ask about silver. Here's the silver contract, Robert. So the buying power requirement to hold it overnight is $13,000. It's probably materially lower than that to hold it throughout the trading day. For an example, the micro that I'm trading, like I said up here, it's $1,500 to hold it overnight. It only costs like $100 per contract. So I can have 4, 5, 6 of these things going during the day, and only not tie up very much buying power. By 4:45 Eastern time, I have to make sure that I've got enough capital, or there'll be a forced liquidation. So I usually get down to 2 or 3. If you traded the silver is $13,000. Now you might have traded the micro, Robert. You can see the buying power for that's only 2,600. That's not quite 10%. I'm really not that familiar with trading the micro silver, the micro gold, and really the only micros I've traded is the E-mini and the NASDAQ. I might have traded the Russell. So I got a second page on this. This is some of the interest. I mean, I don't even think this is of any interest. Some people like to trade the agricultural, corn, soybean, and wheat. Bitcoin, obviously, that gets a lot of activity, and then the volatility stuff. So let's kind of zero in on where I want to go today. I want to answer your questions, and then I don't want to take up too much of your time, but I'm here to answer questions. You saw when you came in the room, it looked something. If you come into the live room every day, you'll typically see this, unless I'm answering someone's question. I'll slide over the either Thinkorswim or the Tastyworks platform. But I've got a chat, and if you sign up live room, you never have to. You can, in fact, if you'd like to talk today, I can pass the mic to you. I can go in here and click on and give you a mic. You can acknowledge it, and you can ask questions rather than type them. That's one of the advantages of the live room. So I've had a few members in the past that would use that very actively. We talk in the afternoon, and it's a lot easier to, like I always say, I talk a heck of a lot faster than I can type. Particularly even on options questions, I like to get in here and open up the mic, and then you can ask me the question. We can have a two-way conversation and make sure that we're clear. But this is what you see when you come into the live trading room. Most of the time, you may see me just have the 30-minute chart. You won't see, when I said here, you won't really see. Normally the chat I've got separated. You may have the chat. You can also. The chat, nice thing about the chat, you can attach it and move it around, put it somewhere else if you don't want it. But that's what you'll really see when you come in. That's the 30-minute chart on the left and the 5 chart on the right. And we'll talk about it. This is the 30-minute chart. And what I do every day, I calculate these. You'll see this black line. I'm going to show you the next slide. But you'll see I calculate these standard deviation levels. So even when you're trading what we're trading Apple or whatever, Schwab, whatever we're trading. Not so much on Chewy, but the bigger ones. I like to look at the NASDAQ if I'm trading Apple and see kind of what the futures are doing, because if they're moving up, I might wait a little bit to get in the trade if I want to sell a call spread and vice versa on a put spread. But this is a 30-minute chart. There's nothing magical about 30-minute. I like to use a 30-minute chart. Some people use a 5-minute chart. Because I like to kind of see the trend, and you can see on this particular day, which I think was yesterday, the day before, that they opened at 6 o'clock Eastern time and kind of bounced around, and it surged up a little bit at the end of the day. It was up 55 at the time I took the screenshot. But so that's a 30-minute, and I like to trade from areas on the 30-minute. But I trade off of this 5 next bar now. This software that I use that you're seeing on just demonstrated here is a product of it's become a friend of mine because we're both from Cincinnati, and I've got a break for a couple of my members. I've got them a little bit of a break on that. It's about a $4,500 to $5,000 product. I don't know, but that works on NinjaTrader. NinjaTrader is free. You can go in there and download a free platform of NinjaTrader. Just go download NinjaTrader on the internet, download it. You won't have these particular screens because all these indicators and areas and stuff are part of the Dimension Trader software. We won't talk about today, but if there's some interest in it, let me know. Now, when you come in the live room every day, I post this, you'll see it in the handout section. If you click on the handout, you can download it if you're interested. And it's a 30-minute chart. It's either the E-mini or the ES, because that's what I'm typically trading. And this kind of shows you what the levels are. 2 standard deviation, on the call side, 2 standard deviation on the put side or at the low side, and vice versa. Typically, I don't like to trade until we get a range that's at least a half a standard deviation. But what I found is these areas are helpful to me. Now these lines, these horizontal lines you see, they're generated by the Dimension Trader software. They're not part of the basic NinjaTrader. I think you can probably get fib lines on the NinjaTrader. I'm not that 100% sure about that. So that's my options trading. I'm mostly a counter trend trader. So I like to trade and that's uncomfortable for most people. In fact, what the guy that developed the software, he only trades with the trend. So so that's, and sometimes trading against the trend can be a real, can give you a lot of stress, but trading with the trend can get you a lot of stress too if you're on the wrong side of that. I just got filled on a contract when I kind of excused my, I went over here and I got another target down here at 15. So what I like to do, I like to look at these areas on the 30-minute chart. Like I said, you'll get this thing on the left, you'll get a screenshot of that every day. And I only do it for either the ES or this happens to be the MES, they're the same. These green blocks that you see on the top and on the bottom are the areas from 1/2 standard deviation to 1.5. Once we have a crazy day and we get up here to this black area, I'm pretty much hands off. I mean, I like to trade when it's inside those green blocks. It doesn't always do that. You can see back here where 5 o'clock this morning, this thing just kind of bumped that. That'd been a good area for me to short. I like to use these standard deviation levels just like I do in options trading. There's nothing different. I mean, I just feel like there are going to be areas where, you get to this 40.28 is a 1 standard deviation. So if that thing goes up here, I've only got about a 16% chance it's going to close above that. So I'm going to be short up in that area, and then I'm going to, I've got a pretty good probability that it's not going to break that area. So I'm going to expand this for a minute, show you. Obviously it is right now. It's got above there today, but I know that if I'm up in this area and I get short, or I'm down here where nothing's been today and get long, I've got a pretty good probability that it's going to be in my favor. Now, it's hard. You can trade if you've got a big account and you just want to get up here and you want to be in these trades for days. You can trade off a 30-minute chart or a 10-minute chart or something. I like 30-minute because in my mind, things happen in 30 minutes. I mean, you make an appointment for, on the hour or on the half hour. I don't know. It just seems like that's how humans work. And I kind of like to see, I mean, these are 30-minute bars. So we had 1, 2, 3, 4. We had 4, which is 2 hours of just straight up, and then I did get fortunate, got one up here short, but I'm still trapped like a rat. You could see this big bar down yesterday after a yell and talk. So I kind of look at areas. I like to trade from areas on the 30-minute chart. The nice thing about the Dimension Trader software is they've got the same fibs here. So, right now I'm short 4 contracts, which is, I want to get 2 of those off before the end of the day, hopefully for a profit or a scratch. But the way I trade, do it overnight. I said, first of all, I'm a counter trend trader. I'm not suggesting that any of you be a counter trend trader. It might not be comfortable. It's kind of funny how I've learned to trade options the way I trade them and not puke them out from trading futures, and vice versa. They both kind of complement one another. So I mean, I've got a pretty good, if we get a big extended move in a stock, you see me sell a call credit spread or a short call or something like that. Nothing different over here. If I get a big move and it's up around an area, I'm going to be looking to short it. Now, obviously, I've gotten run over today a couple of times because I've gotten short. I've gotten short back here. But that's normally, hopefully they'll come back. They don't always do the same day. When I trade counter trend, and I'm going to show you here, this would be a perfect setup. I don't even know if it worked. And I don't expect, listen to me blab for a few minutes and think that you could do it, because it takes time and it takes confidence to really, kind of trust it. And that's why I suggest using the micros, because, they're $5 a point. If you get run over by 10 points, it's $50, and it's a good way to learn. And then you can always go to the E-mini, and if you make $100 in the micros, that's $1,000 in the E-mini. So like I said, this is a perfect setup. This thing, I'm probably back here around 1046, I would have gotten short, but it blew through that area. It came up to another fib. So I'm getting to another fib. Again, I'm looking for areas to sell from. I'm not out here selling in the middle somewhere. So it takes patience. Once I get to this fib level, Now I'm looking for a reversal. And what I do there, I'm typically, if you look at this part in the middle where you see these green vertical bars and red bars, I'm looking for a divergence. Now, you can see there's a little bit of price continue to go up, these sold off. And once these start stepping down, I'm usually going to get in. And I'm usually going to jump the gun. I like to tell people to wait for the red bar up below the zero line, but I'll probably get in, because I've developed confidence in it. I say, okay, what's the high? It's 39.75. I'm usually going to take 3 points off that, so I'm going to get in at about 36.75 on this divergence trade, and then I look for a 3-point target. So, and what that means in money is, if I make 3 points, it's $15. If I trade on the big contract, that's $150. So, it's for me, it's pretty simple. And there's another gentleman that has the software. There's a couple of them in the room. Jim doesn't come in the options room. He doesn't trade options, just futures. But he also will trade the divergence. He uses a can. There's probably as many ways to trade futures as there are people, I guess. So whatever makes you comfortable. But this, like I said, would be a really good example of how I would trade them. It comes up here. It gets close to this fib. I'm looking for a reversal. And as soon as it gets a high, as soon as I see the high, I'll go something like this. I'll come here and I'll set up that's 439.5. So 439.5. Then I'll come in here at 436.5. I'll sell one. So, and it'll put a line there. And if I get filled, I'll have a target of typically 3 points. Right now, I want to something. Let me show you something that's, to me, is very important, and most people don't refer to it. I'm going to bring this thing up. Oh, Miles, I see Miles has showed up. Hi, Miles. I did record this, so if you want to watch it, now I can't figure out why I want to show you this futures, what I calculate every day. This is what I was looking for. I run a spreadsheet, and I import this data in every day, and this first column is the ES. The ES or the MES are both the same. So what I like to do is I like to see, right now I'm using a 3-point target, but is this expected 1-day move, standard deviation move, has been around 45 to 50. As that starts to come in, I'll change that target. I'll compress that target a little bit. I'll probably go from 3 to maybe 10 ticks, which is 2.5 points, or even 8 ticks, which is 2 points. So I do calculate these standard deviation levels. And that's why I put them on that chart. And then, see, yesterday, because of volatility, the expected 1-point range was 100 points. I think I told you I put on a strangle in the micro, but now it's down to 67. So, but that's the reason I picked 3 points is not really arbitrary. I'm using that pretty much for the expansion. Now that it's down under 70, I'll probably start going down to 10 ticks, because the larger that range is, the more expanded it is. The bigger runs you get. You can see these runs. I mean, if you went long down here at this fib area, 423. Now you're not going to get in at the bottom and out the top, but I mean that's 16 points. 16 points. Is $80 on the micro, and it's $800 on the E-mini. So I'm not going to be trading a 3-point target if the range gets down to 25 or 30 points. It just doesn't work. So, and if any of you guys want to ask me questions, like I said, I'll pass you the mic if you've got a mic and it's easier to ask questions. I didn't know how deep to get into this. What I do is really, really simple. I mean, I'm trading counter trend, so I'm trading against the trend, but I'm trading at areas. So if I were trading, on the long side right now, and it came down and bounced off this fib, I would be looking for an entry, which here would be a divergence. You can see this is a divergence. You can look at it on a number of different indicators. So, and as soon as like I said, I usually jump the gun. There's a white arrow there. This would be the trade. I'm going to mark it for you. So you're going to get long at around 40.21. And if you had a 3-tick target, that'd be 40.24-ish and a quarter. So you'd be out right, you'd be out there. But you might want to use, bigger targets or smaller targets. Jim, who trades very successfully in here, uses a 7-tick target. So, and if this range keeps contracting, I'll probably be at a 7-tick target. So, but that is a little dynamic as far as that's concerned. So that's really what I do. Here's another divergence. I like this the best when I have a green background because the trend is up. I want to be a counter trend trader, so I'm looking. I see this divergence created, and I'm going to be, right now I'm short, so I can't go long, but I mean, that would have been another divergence trade short right there. I'd have probably got filled, take 3 off that, about 424. So 421, so I already would have hit target. So that would have been I think I did take that trade, come to think of it. So yeah, like I said, I didn't want to go into too much depth. I don't know what you'd like to see. It's not something you look at for 15 minutes and you trade. The only thing I would say is if you want to trade futures, I would certainly encourage trading the micros, because we didn't have those to learn on. And, you know, I could sit here and the micros go against me 10 or 20 points. It's 50 or 100 bucks. I don't, if it's the big contract, you know, now you're 500 or 1,000, that, you know, that makes you squirm a little bit more. The other thing I did want to mention, and I talk about it in a room, is this is on the Tasty Trade platform, of course. But this MES, you can trade futures options, and I like to trade futures options. I'll show you the positions I have on right now. I think they're a little less stressful. I think they're a good way to learn too, because they don't move so much. But as an example, you see this 40.55. If you look up here this morning, you can see right here at 11:06, I sold that for $13 credit. Well, what that means, it's $5 a point. So 13 times 5, I collected $65. I'm trying to exit it for 10 bucks and make 55 bucks on that. So that, I'll do strangles on these too. I might go out a week. Now I don't go out, you know, typically I don't go out 3 or 4 weeks. I do have a position on. You can see this strangle. I think I took off the put side. So when it goes down, I'll probably put the put side back on. But I'll sometimes go out, get out here around the 20 delta. You know, maybe sell something like that. You know, now I'm collecting $40 credit. So that's $200. If this thing, you know, if this thing expires worthless, which I typically don't wait that long, I mean, you make 200 bucks. And it costs you about $1,500. You're going to hold it overnight, so you know, plan on about $1,500 in buying power to hold that thing. So yeah, it says 892 because I already got something on. So that's a little. Normally, I probably got 10 or 12 of these positions, futures contracts, because I like to use them, you know, not only as a hedge, but you know, if this thing starts really selling off, I'm going to come down here again, and I'm going to sell. Probably go out 1 week to the 31st. And I'll be selling some puts down here, just like your option contract. These are futures options, just like your option contract. So I'll probably come down here and take a look at where the chart or where the standard deviations are. But you know, I like to sell something around where I'm getting at least, you know, around 20 bucks if that's far enough away, because that's represents $100. So for one contract. So you know, if it comes down and the IV rank, you can see he's dropped down on that a lot, but you know, I sell that thing for $100, you know, then, you know, I might take it off for, you know, 10 or 15 or 20. That depends, you know, what happens, because these things are dynamic. They'll change just like your options. You know, you get an option, even if you sell this for 12. You guys are good luck. I've gotten out of 2 of these things I was trapped like a rat in. So back down to 3. I had 6 contracts. Now I got down to 3. So, but futures options, I think they're pretty cool. You know, I just think they're another vehicle to trade, just like we trade options. And I like it because, you know, it's something to do when options are slow. So you can do the same thing. You say, okay, I'm going to trade, you know, the 1 standard deviation. You know, you might, if you want to just stick your toe in the water, what you might want to do is look in the live room every day, like I talked about, and see. Let me go back to here. See, where are the standard deviation levels today? I mean, you can look. You can see 4082 and 3863. Now, I mean, you know, those are like, you got a 5% chance of those getting tagged, so you might start out in the morning. Now, you can calculate these. If you want to go out a week, I can change this from 1 to, I could be happy to give you any of you guys who want this gets data off Thinkorswim. So if you got Thinkorswim, TD Ameritrade, but you could go 5 days like that, and you can see where the standard deviations are out for 5 days. But what I was going to say, you might say, okay, just so I learn how to do this a little bit, I want to be really conservative, and I want to sell, say, 40.82 and 38.63. So let's just say go out a week. They've just opened up these daily ones. I'm not messing with those yet because there's just not you can see there's no open interest. If you get a trade in one of these, you're going to be the only guy, you'll be trading against yourself. You'll be the only person in the trade. But I would stay with the weeklies, and then sometimes the quarterlies are okay. But the 24th expires tomorrow, the 31st. So what do we say those numbers were? I can't say 40.82 and 38.63, but we're going to say 40.80. So let's just see what that would pay. So let's say 38. You're going to get more premium on the put side, and especially now with it, the market up today. You probably got more risk to the downside. But let's say that 38.60. You say just so I learn how to do this, I'm going to sell that, and I'm going to collect about $50. 10 times 5. Okay. And then I'm going to go. I might sell that one. I might say, I think I could give a little bit of room. I might just, maybe cheat on that a little bit and say, go up here. Watch your open interest to make sure there's a sufficient. Like here, there's no open interest. If you trade that one, you're the only one in the whole world in that strike. So you collect $23, and that expires next Friday. So 5 times 23 is $115. You're gonna collect. I'll show you here. You hit review and send. You're gonna 100. Well, it's a little over that. 116. Cost you $1,000 to put that trade on. You should be 1,500, but I would plan on 1,500 or 1,600. It's probably because I have some positions on that are hedging one side or the other of that. But I'll clear that order. But that would be you could put that trade on, and then just ask me in the room if I don't do anything. I don't move them until. If I come, and I'll show you, I think, let's see if I've got one that's breached today. No, I don't right now. I'm fortunate. But if I had one, this thing was down, and let's say I was short this 40.40, that's what I put on down on the put side. You can't roll these things yet, at least in the Tastyworks platform. Yeah, I think you can on Thinkorswim. So I'd buy that back. And then I'd say I paid $35 for it. And I'd come out, I'd go out a week, and I'd say, okay, so I could sell that one for $35, almost simultaneously. I'll close one, I'll buy the other one right away, about the same price. So effectively what I've done is I've rolled that out a week, and I've rolled it down to the 39.85. So I've been talking a lot. How about any questions? Robert, I don't know. You talk about how they settle. Most of them, I know most of the indexes settle to cash. Now, I could tell you on Thinkorswim, what I really liked about Thinkorswim that I don't like about my NinjaTrader platform right now is that if I sold a future, then I could sell a put to hedge it, and it wouldn't. So if it took $1,500 to sell that future, I could sell the put and maybe bring in another $100 or 20 points. If I sold it, if I sold at 40.13, I raise the price $20. I'm up to 40.33. So that's one thing that I like, and it didn't take any more buying power, which is where I was going with that. So I've covered the 24 and the 15. So my next one should be at the 401.50. It's not going to probably hit for a while, but anyway, that's what I do. Here's another great setup. See how this thing broke through the fib, pulled back to the fib. I got a divergence here. I'm not technically a divergence, but I got this white arrow. I mean that would be a good one. Say you got in at 40.17, and you had a 3-point target, 40.14, you made $15. You might want bigger targets, but again, I kind of calculate my targets based on what the daily action is. How about some questions? I've been doing all the talking for 45 minutes, so then, like I said, I did record it, but if you want me to give you the mic, I could do that. Or if you got a question you want to type in there. I didn't want to go into too much detail. Just kind of give you an overview. I do have that slide presentation, this PowerPoint. I want to clean up a few things, but I can give you that in a PDF form or the PowerPoint form. But it's really, it's just like, to me, it's trading options improve my futures trading and vice versa, like I said earlier. I've got to the point, I know that I don't puke things out as a result of, I know markets move. I mean, this morning, I'm short like 6 or 7 contracts, and, it raises your blood pressure a little bit maybe, but, I've just seen this movie so many times that, not that I know what it's going to do, but I think I have a decent idea of what it's going to do. So now I'm down to 3 contracts short. I want to get down to 2 for overnight if I can, if this last one fills, and then I'll just play. Now, most of the time I trade both directions. The fact that I'm long or I'm short a couple of contracts, I can only trade shorts right now, because if I try to trade long, it's just effectively going to buy it off. Yeah, Robert, that would be what I would do, and I highly recommend that. What I did the other day, I got caught, and I didn't, so I know it cost me about $1,500 a contract to hold them overnight. So as long as I got over $3,000 in there, I'm not going to get liquidated by the broker. I really believe it's best if you're starting out to trade them during the day. Most people, the other guys in my room that trade futures, they don't hold them overnight. I would suggest that you enter and exit the same day. Now, the other thing about that is, if you're trading the futures, again, you want to, they shut the market down at 5 o'clock. Now, I'm not 100% sure on this, but I think once you get to, I think once the market shuts down, or maybe it's at 4:45, the margin pops from, like on these, like I said, it's like $150. It goes to $1,500. So that, there's a time in there. I need to really find that out when it triggers. But I just always know that if I've got, let's say I got $3,000 in my margins or my futures contract trading account, I only want to be, if I'm going to hold any overnight, I'm only going to hold 2 of them. So that's 3,000. And I make sure I got 3,000, because they'll liquidate, 1 or both of them. But I would say if you're starting out, I for sure trade. Now, that's the thing I kind of like about the futures options is there's, even though they're the same, they're, to me, they're not as time sensitive. Every one of these ticks, you can see this is points, but how many points up or down, and sometimes I think that affects people. That I know I see it in the options, where people say, your contract's out of the money, your short call's out of the money, but the IV's gone way up. So now, it looks like you got a losing trade when you really don't. But the nice thing, like I said, I like to sell. If I'm going to sell one of these, it's say 40.15 right now, I'm going to probably come down here and I'm going to sell something around this 39.50, and I'm going to get $25. So that $25 will raise the break even to 40.40. And if it comes down and it closes below 39.50, the broker should buy that back, should close that and not sell it for cash. And so you would be long one at 39.50, but you were short at 40.14, so I'm sorry, 40.40. You got 90 points. Okay. I'm using Ninja Trader brokerage right now. I was using AMP for. Obviously, this is Tasty Works, Anthony, but I'm using Ninja Trader brokerage. They're basically the same price. I really like trading on TD Ameritrade, because I would sell a future on there, and then I would sell a put right away. It didn't cost me any more money. So, and let's just say I wanted to get short right now, and I sold the contract for 40.15, and like I said, I sold this for 39.50. To me, I've raised my break even, by 25 points. I'm up to 40.40, but if it crashes down and goes short like I wanted to, and I get, I go long at 39.50, well, that'll cancel out my short, but I made 70 points. I mean, that's $350 on a micro, 3,500 on an E-mini, and that's why I like. And I don't know if they do it anymore, but Thinkorswim, when I used to trade futures on there, I could trade. It's the same thing going long. I could buy a future here at 40.15, sell a call up here like a covered call at say 40.60, get $25. I've lowered that down to 30.90, and if it comes up here, I make about $60. Okay. I thought Dorman was they used to clear for, didn't they clear for TD Ameritrade or somebody? I remember, or maybe it was Ninja Trader. I remember interacting with Dorman. So that's the, but I would encourage you. I hate this. That's probably not the right word. I don't like to encourage anybody to do anything, but you get, if you got $1,500 sitting in your account and you could, trade these, or even trade a strangle on them, that I think they're kind of fun. I mean, what I do on news events like yesterday, I go in there, and I think I've alluded to it in the chat. And let's say it was happening today, and price would be down here in the middle someplace because it just opened up. I would sell it to the standard deviation strangle. Maybe I'd fudge it a little bit, one way or the other, and collect. And then once the news comes out, then the implied volatility drops dramatically. And if it spikes up like it did yesterday, it spikes out again like it did here yesterday. I mean, you're back to where you started, and you can take that thing off. So, and you can use the futures options just same as the same as the futures. Now the other thing I meant to mention is, I should probably put it in here. The other thing I like to do, is on the Tasty Trade platform, they've got deltas. You can see right now I'm minus 38 deltas. I like that up around 100 or 2. So let's just say if this market sold off and I got, my deltas went from minus 100 to plus 100, I may sell a future contract to pick up some short deltas. But again, that's me. I like to be about, obviously, 30. I'm short right now. What does this mean? I'm short 38 deltas. And I talked to Clyde about doing a course on this. I'm short 38 deltas. So what does that mean? That means I'm the equivalent of short 38 shares of SPY. So that's a dynamic number. Now, if you own stock, each share of stock is 1 delta. So if 100 shares of stock, you got 100 deltas long. If you sell it, if you're short the stock, you're 100 deltas short. That doesn't change. On options, that delta is changing all the time when the price moves. So what may be, and you've seen this in the options trading, what may be a 16 delta option now, the market on the put side, the market tanks. It might be a 40 delta, or it might be in the money, it might be a 60 or 70 delta. So those things are changing. But one thing I like to do, I like to keep my eye on my deltas. I watch my extrinsic value. This is a small $25,000 account. So I watch this extrinsic value, I watch the deltas, and I watch the thetas. Theta tells me I'm only got I'm low on theta. I got to get some more theta. I'm down to $105 a day in theta decay. And if you look at that extrinsic value number, I like to keep that around 4,000. So that means that this little account, I'm going to expect to make about 1,000 a month. because you're going to collect on extrinsic value. By the time you manage your winners and you do all that stuff, you're going to get about 25 cents on the dollar. So if you got, and it of course depends on account size, but I got 2,100 now. I'm going to get that up. I'm going to have to sell some stuff, get that extrinsic value up. But I watch deltas, because if I'm sitting here and the market moves strong one way or the other, I'm going to do something to either, if I need more short deltas, I'll sell a call or a call spread, or I'll sell a skewed strangle. If I need, if I need positive deltas, I'll just do the opposite. But obviously, spread trades, you do a spread trade, and the problem, I don't say problem. Okay, here's a spread trade. So if I sold that, I'm only getting 16 short deltas on that $5 wide. So, because you got the long leg, if I delete that, 35 deltas, see right there? So I get 35 short deltas by selling on a short call. So I like to manage to neutral. I like to be, but personally, and again, this is just me personally, there's something in my brain that I have particularly in this environment, I've got a bearish bias. Now we get down around 3,000 on the E-mini, I'll probably change that to a bullish bias, but right now I'm bearish. So I don't know if that makes any sense, but you can also trade. Most of these platforms have a dome too, Anthony. You can trade on the dome. I haven't figured out on Ninja how to put in a sell stop. A buy stop or a sell stop if I want to get in at buy it at a lower price and sell it at a higher price. Any other questions? I appreciate you guys' time. I hope this is just a overview. I mean, if you have time, I'm usually starting to look at futures at about 8 o'clock in the morning. I turn to put the room on, and then Jim Black comes in, and then Steve, who's out on the West Coast, comes in, and gets really slow. Okay. Yeah, it's really slow, but you might see me, I'm going to be taking trades, and it, speeds up when the equities market opens a little bit, but, right now, I'm hoping this thing gets down another 12 points and takes me out of this one. I'll be down to 2 contracts. I'm comfortable holding 2 contracts overnight because I've got this bearish bug in my brain. It's no fun when it goes up like it did yesterday, but yeah, I've done it a little bit on the strangles. What I've done, let me show you. Because they're similar to the trades we do, let's see. I think I've only posted 2 of them here because I told you, if you were in the room when I did I was at the doctor's yesterday, so I didn't get to put the strangle on that I wanted to. Slipped my mind. Where's it? Yeah, here's an MES trade. Here was an ME strangle back on February. There was some kind of news event. So I like to watch the news every day. And I sold the 4110, 3920 strangle. Sold it for $111, kind of like what we were talking about. I took it off for $10. I netted $86.29. Not a big deal. But, that one only took $885 of capital. So, but I do too many trades to put every single the futures trades on. I mean, I wouldn't mind doing it. I didn't want to, I'm trying to keep this log and all these trades by strategy. I post it on the new website. I'm trying to get that done and post them in Facebook and everything. So I kind of want to keep it mostly option trades. I could print off a performance on Ninja, but I wouldn't want to put all my buys and sells on futures here, because I mean I've got, I do a lot of them, so that I don't mind doing on the strangles or the straddles. I mean I think I've got 4. Let me see something. I will show you something there, Robert, that and see the problem is the problem with the problem with Ninja Trader is it's first in, first out. So I've done 240 trades since the 1st of March. And it shows a profit of 600, was it 665? But I also have, because it goes first in, first out, I don't know if I can explain this properly. I've got about $200 in unrealized profit right now if I just closed out. So that number would jump up, and I'm down from where I was. I was up about 1,500. So, but what I do is I keep track on a spreadsheet like this until I get flat. I've got these 2 positions up here that I'm way upside down in, and I'm just gonna hang on to 2 shorts until the market gets down there. It gets painful, it goes up and down, but I keep track of those trades. See, although I'm up money on the way I do them, I take, if I don't take first in, first out, I match them up like this one, and I'm down 127 points there, which is $600, but I'm up the way they look at it. So I'm not down $600. That's if I how to explain that. That's because I still have these on, but these are still open. So I still got these 2 open. So once they get down 70 and 50, then that'll be back to about even on that trade. So long story short, I don't think there's any, I don't mind putting, and I'll put, if I do a strangle, like for news, which is like one of our regular option trades, I don't mind posting that. But I don't think, I would need another person to post all my trades, because just here this morning, I don't know if this makes any sense, but I don't know what my first trade was this morning. I think I got short at 30.98, took it off for 85, made 3 points. Then I made 50 cents. I don't know why. I closed that out for some reason. I think I had a fat finger mistake here somewhere, because normally you'll see most of mine are 3 points, one way or the other. So the last trade I took it off for 3 points. But what Ninja Trader would take is they'd take this 40.34, they'd match it up with the very first one, and they'd show the loss. So I don't know if that makes any sense, but I want to know in my mind. I'm going to work my butt off till I get all these 120 points back on those 2 contracts that I'm short on. So. Anything else? Any other questions, thoughts? I mean, I try to tell you in the room if I'm doing a strangle on the MES like I showed you, and I think that's a good place to start, especially depending on kind of software. Now you could just short shorted extremes or something, but I mean sometimes these futures contracts, they last like a nanosecond. You get in and hit your target, like if the market's going, quickly one way or the other, you're in. Now see, there's a divergence trade long. So if I was, it didn't get all the way down to the fib, so I wouldn't have taken it. But that would be a divergence long where I would be in at about 40.14. So I'd be looking at 40.17. I'd be out there. So that was that was less than 2 minutes for that trade. And sometimes they're like 2 seconds. You get filled like this one. If you got in this one, you get short at say 1475 down here somewhere. You had a 3-point target 1175. I mean, you'd be out of that in less than a minute. So I think the future options. I think the nice thing about that, I think you be in them longer, and you also might want to put them. You know, if yeah. Well, scalping's scalping's not for the faint of heart, Robert. I mean, neither is, I mean, I see guys in the room and the members that, they put on a, let me see if I can find one here. I'm sure I've got one. Let's find something. Okay, there's an FCX trade. I sold that thing for $1.45, and I want to buy it back for 50%. Now the put side, it's only down to a 5 delta. I need to roll that up. But my point being, you look here and you say, well, this, they freak out and they close this because it's, they've collected $1.40 and now they're at their break even. Well, this thing's $1.50 out of the money. So I mean, it's just. And it's probably going to roll over and go back the other way. So that's why I said I don't really do much. I mean, it's the same thing with the futures and the futures options. And also, if you're in this trade and the IV expands, the price of this is going to go up. This price could stay right here at 38.50, and this thing will jump up, and then you'll say, "Oh God, I'm losing money on it," but you're really not. On futures, yeah, on futures, I don't use a stop loss. What I like to do, I mean, I recommend it, but I like to use futures options, Anthony. Like I said, I prefer to use a future option, but it doesn't work well on Ninja because they don't have futures options. So yesterday, I was going to be gone, and I sold up future on my Tastyworks platform just to kind of lock in where I was on the Ninja Trader, and it worked out. I mean, the thing dropped like $350. I made like $350 on the, but I lost on the other side in the Ninja platform, but at least I hedged that. So the guys that trade futures usually use a stop and a stop loss. They use a target and a stop loss. I prefer. The one thing I hate in life is getting stopped out. I prefer not to hold them overnight. I like to be out every day. You wake up and you're down 50 points. It's $250 on a micro. It's $2,500 on an ES. So I don't think I would hold those overnight without hedging them somewhere. But the fact that Ninja Trader doesn't offer options, the only thing I can do is I'll take the opposite trade over here on my Tastyworks platform. I lose 200 on the Ninja platform and hopefully make 200, 150 on this platform. So I think it's better to, the other thing about Tastyworks, and I said, I'm going to hit a third target. This thing gets 401.50. Look where this thing was. It was I was down to almost 40 points on this. Well, I got in at this was 404.50 with a 3-point target. So hopefully I'll get out of that one. I'll be down to 2. But I got two targets way down here that I want to get to. And then that 120 point deficit will go away. I didn't realize I was that close. But what I'll do, Anthony, is if I'm concerned and I don't have futures options here on Ninja Trader, if I'm short like I am right now, I might come over and go long on the tastyworks platform, or go long, I would sell a put. If I'm short a future, I want to sell a put. If I'm long a future, I want to sell a call. Just kind of like we do in the, just like our options trading. So that answer your question? I mean, but I'll keep you guys posted. Oh, you're very welcome. I'm sure this was very, very sketchy today, but I just got an overview of what I do. I can tell you, I told you to, 2 seconds how I trade as far as, I do counter trend trades. I go, right now, if I wasn't short, I would have probably taken a long from here. It got down to the fib area, overran it a little bit. I might have got long at around 406 quarter, looking for 3 points. It'd be 409 quarter. Well, right there at the 1-to-1. These blue dots are these cyan dots, and those are one-to-one extensions, which is so. This thing might be, I've been waiting. What time did I put this trade on? At 401. 401.50. What time did I put that thing on? I might have the wrong. Let's see, 401. So that would have been 404.50. Oh, I put that on at 9:44. So 404.50. So 9:44 to 116. Usually you're not in them this long. So let's see if this thing gets filled. Came back along. Okay, I'm filled now. I'm out of all those that I put on today. So what I do then as I come in here on my sheet, now I'm down to, I got to fill these out. That was 401.50. So this got filled at 401.5. And the 418.75 got filled at 401.5.75. And the 4024 got put 40. So if you got the patience, which sometimes is a challenge for me. So these three trades, yeah, I made 3 points, 3 points, 3.9 points. That was $45. It'd be $450 on the big contract. So I'm gaining, and this is so I'll keep trading. I'll keep trading, but like I said, it's first in, first out. So I can't rely on the numbers from Ninja Trader. I mean, they got, you can print off all your trades and everything, but that's just the way they do it. And I get it. Right now I've got $260 worth of unrealized profit if I close it out, because it's looking at by the first in, first out method. My entry price is way up here at 430. Now, I would never hold something for 28 points, but I'm really looking for I'm really looking for this thing to tank. I even could put purple lines over here on my chart so I can keep eye on the 30-minute chart. Fortunate enough to hit one or both of these targets. It'll be, well, what is that? That's an average, 35 and 55. So it's 45 in my entry. That's 30 and 55, 85 times 5. See, that'll be $500 in profit. So, but I mean, I don't know if it's ever going to get there. But the only problem with holding trades overnight is I've eliminated myself from taking longs right now because I'm short. If it was the other way, I like to trade both sides. And if I get, by the grace of God, I get flat today or tomorrow, then I'll be back to trading, long short trades and short trades. So, but right now all I can do right now is take, if I get a good short trade, we talked about that. I haven't got a short from an area yet. Maybe I did. No, this didn't quite get to an area, so I wouldn't have taken that one. But anyway, any more questions? I'll go grab something to eat. I don't want to cut you short. Or if you got questions about options or the trade or the Tastyworks, okay, Robert, about the Tastyworks platform or something, I can Happy to cover that too. Okay. Yeah, Anthony, you currently, if you don't have Tastyworks, I can send you my referral code if you wouldn't mind. But if you've got Tastyworks, no problem. So, if you decide to get it, if you got any questions on it, we can come in here and do, answer your questions on it. I do that, normally from about 8 to 11, I'm potentially trading futures if I'm not stuck like I am right now. But all right, Rob, you're welcome. Thank you. Thanks for coming. Thanks, Anthony. Thanks, Miles. Let me know if I can help.